Hey Sherry, Terry Dyer here, mortgage broker, real estate broker. I set up that property search for you and we texted a bit. And I wanted to take just a second and show you how the interest rate or the lending part of the business works, okay? Finding the property is one part, of course, and the loan is something that you were on Lending Tree about. And I want to show you how that works. Real quickly, this is what I set up here. I didn't really set it up, but I uploaded your information into a software program that we have called Loan Sifter. We licensed this, and into it we put a bunch of, all these lenders here and all these pages of lenders are in here. And so what I want to do is search all of those lenders to find that lender with the most aggressive pricing for this loan scenario or your loan scenario. And I'm assuming a principal area purchase price of $400,000. Doing an FHA loan, we'd have 3.5% down. I put in here a townhouse, but it doesn't matter. It could be a condo or single family. And I'm using a 680 credit score. This is important. If it's 620, the pricing would be different. Of course, owner occupied, it's a purchase, and a 45-day escrow. Sometimes when you talk to people about interest rates, they could quote you a 21-day lock or a 30-day lock, but these time frames are ridiculous because you can't get the loan done typically within 21 days, but oftentimes even within 30 days because escrows take longer sometimes. So I always stick with the 45-day pricing, and I can explain it to you in depth a little bit more, in depth if you like. But we'll do a 30-year fix. There's no prepayment penalties or anything like that. I have 92114 in here, and we're just going to go with our approved investors, which are the ones that are most aggressive. And so what happens is I'll go ahead and submit this information, and then we'll get the results down here. You see down here where I had searched this previously. So the results for today for an FHA loan, it looks like what this number is that you're seeing over here. It says 1.375. That's what the lender pays to Hanson Loans. And then right here it says $351. That's the credit to you for closing costs if your interest rate is 4.25. So I know I'm going backwards, but this is the best way to read it. So assuming a $386,000 loan, meaning that you'll have $14,000 down, okay, a rate of 4.25, the payment would be $1,932. That's just principal and interest, okay, not taxes and insurance and your mortgage insurance premium that you would also have with an FHA loan. So that would give you a payment of $1,932 principal and interest. Expect with an HOA, this will be another $1,000 higher. So at 4.25 down here, the lender isn't really paying much of your closing costs, but you can see if we went up just a little bit higher in the rate, the higher the rate, the more money there is from the lender, and all that money goes to you. I don't ever get compensated based on interest rate. If you pay a higher rate, you get more money from the lender, and they can use that money to pay your closing costs. So at 4.5, you're getting $3,200. And what this is an ability for you to decrease the cost of entry, because we can get the lender to pay some of those costs for you, those closing costs. So 4 5/8. At 4 5/8, the payment would be $2,019. So go up to 4 5/8. This is the same loan amount. The payment's $2,019, and you're getting 4 5/8. You're getting a different lender here. You'd be getting $6,400 back. So what I'm going to do is recompute here because lenders are more or less competitive with different rates, and you can see where UWM, United Wholesale, was more competitive at 4.25, but when we get to 4 5/8, they're not so much because this lender here is going to be giving you $6,400 in closing costs credit. So 4 5/8, the payment is $2,019, and say 4.25, the payment is $1,932. So it's basically like $90. For $90 a month, you're going to get You're going to get about $6,000 from the lender to pay your closing costs. So a lot of people do it that way because, it's really inexpensive to get into a home having the lender contribute $6,000. But the choice is yours, and it depends on what type of money you have sitting, in the bank and able to use for a down payment. So this is just how we structure the loan, and it really depends upon your entire financial picture. If we come up here and lower the credit score to 620, then we'll go ahead and see what the result is. But at 4 5/8 here, Ditech was giving you 6,400, and now at 4 5/8, Ditech is giving you 3,100. So you see how that credit score makes a big impact. 620. Everything else is the same, just the credit score is lower, and as a consequence, the rebate is down about $3,000 for the same rate. Okay, so I think that kind of wraps up how we do the pricing. And if you come down here, see, these are the most aggressive lenders at 4 5/8. Lakeview, PennyMac, and Ditech up on top. But you can go all the way down the list here. Here's Loan Depot. And at 4 5/8, this lender would charge you $239. In fact, if you come all the way down here, United Wholesale Mortgage is actually charging for this loan down here. What is this? Yeah, $5,000. United Wholesale, they have two of them, two FHA loans. One's Fannie Mae, one's Freddie Mac. So yeah, these get expensive. Not everybody's. You can see how lenders at the same rate, lenders price their loans so differently, and that's why it's good to deal with a broker, Windsor Capital, or rather Hanson Loans, and because we work with all these different lenders, and who knows who's going to be the most competitive at any particular price point. But that's why we have the benefit of the software program on all of these lenders, so that we can find out who that is for you. Okay? All right, so I look forward to chatting with you. Talk to you soon. Bye.